Step 1, wake up early, gonna rise with the sun. Step 2, get some good, some food in you. Step 3, think real hard about what you wanna be. Step 4, everybody just do your thing.
Wake up, today's gonna be a good day. 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 Wake up, today's gonna be a good day.
Good morning, good morning. Welcome to Good Morning Crypto, where we turn your early hours in the morning into your edge in the financial world. Today, I've got a few headlines. One of them is over Bitcoin ETF inflows, and the other one touches a little bit on the interest rate decision and the one person who didn't agree with a 50-point cut. So, let's dive in and get you prepped for success today. Let me swap over to my screen, and I've got the stock heat map pulled up. So, from yesterday, we have Apple up 0.4%. We've got Nvidia up almost 4% at 3.97. We've got Amazon up 0.04%. We've got ExxonMobil down 0.26%. Tesla is up 1.71. Visa is down 5.49. We've got Eli Lilly up 0.64%. And Microsoft is sitting down 1%, while Google is up 0.27 and Meta is down 0.19. For the crypto side of things, we have Bitcoin down 0.89%. Ethereum is down 1%. We have BNB down 1.69. Solana is down 1.65. We've got XRP down 0.44. Dogecoin is sitting down 0.69. Toncoin is up 1.25%. We've got Cardano down 1.39. Tron is down 0.4%, and Avalanche is down 2.5%. For the economic calendar today, we don't have too heavy of data today. Tomorrow will be the very heavy data drop with GDP coming out for the US. But for today, we do have this afternoon crude oil stock change, as well as new home sales month over month as well for new home sales. That will be at 9 o'clock my time, and that's coming out 10 o'clock Eastern time. For 10:30 Eastern time, that's going to be the crude oil stock change, which will be a light mover of the market. You know, oil does still run the world. For tomorrow, we do have early in the morning our data drop. That will be 7:30 my time, so 8:30 Eastern time. And most of today is going to be posturing for that data drop. It is predicted to be up from 1.4% to 3%. So if we do get that move, along with our 50-point rate cut, and going into the busiest season of the year, we could expect a lot of upward movement. Let me swap over to the heat map, the liquidation heat map for Bitcoin. We do have some liquidations sitting above us at 64.9 to about 65,037. So a little bit of liquidity above us is hotter than the little bit of liquidity below us. We are sitting at 63,183 to 63,292 for the liquidity on the bottom side. We did take some of that out already. That was sitting at 63.5. So could still see a little bit of ping pong action on that liquidity. You know, GDP data coming out this week has kind of stalled price action. It's been a very, very boring week. I haven't taken any trades for the week so far because I only like to trade Bitcoin, and it's been in a kind of boring range. And sometimes a good position to take is no position. Save your capital and just wait for the move. So, on the stock market side of the fear and greed index, we are sitting at 66, still in light greed, up 1 point from yesterday. On the crypto side of things, we are up 5 points and sitting at 59, still in neutral, but might hit that light greed side of things before we get a move down. I know Lunar Beaches has talked about that, so it is something to definitely keep in mind. We've got a lot of bull divs on that higher time frame chart for the 4-hour that have not dived yet, so might play out. I'd like to say good morning to the chat. We have Darren Does Things in here. Melissa, good morning, good morning. Anthony Soprano, Tradefly, and Mark Dutch. Thank you for showing up this morning. If there's any assets you would like to see some TA on after I go over these few headlines, please drop that in chat for me and I'll take a look at that. So, Fed Bowman says inflation could bounce back. Federal Reserve Government Michelle Bowman is still primarily focused on the inflation-fighting half of the central bank's dual mandate, unlike many of her colleagues who are concentrating on developments in the U.S. labor market. Such concern led her to cast the lone dissenting vote on the Fed's decision to lower its target interest rate by half a percentage point on September 18th. Bowman preferred a quarter-point cut at the Federal Open Market Committee's September policy meeting. The Fed policymaking body had held its target for the federal funds rate steady at a range of 5.25 to 5.5% since July 2023, and it worked to bring down decades-high inflation. The fight isn't done yet, Bowman said Tuesday in remarks before the 2024 Kentucky Bankers Association annual convention in Hot Springs, Virginia. I preferred a smaller initial cut in the policy rate while the U.S. economy remains strong and inflation remains a concern despite recent progress, Bowman said. The latest available reading of the Fed's preferred inflation measure, the Core Personal Consumption Expenditures, or PCE price index, showed a 2.6 increase from a year earlier in July. That's down significantly from the rate of price growth seen earlier this year, but still uncomfortably high, said the Fed's 2% annual inflation target for Bowman. August PCE data will be released Friday. In my view, the upside risks to inflation remain prominent, Bowman said. Global supply chains continue to be susceptible to labor strikes, and increased global tensions could result in inflationary effects on food, energy, and other commodity markets. Expansion and fiscal spending could lead to inflationary risks, as could increased demand for housing given the long-standing limited supply, especially of affordable housing. As for the U.S. labor market, conditions have cooled from overheated levels seen during the recovery of the COVID-19 pandemic. Hiring and wage growth have slowed. Unfilled job openings have declined. Hiring and wage growth have slowed. And the unemployment rate has climbed to 4.2% in August, below Bowman's estimate of full employment. It's hardly a job market that needs emergency rescuing, she argued on Tuesday. Still elevated wage growth, solid consumer spending, and resilient GDP growth are not consistent with a material economic weakening or fragility, said Bowman. My contacts also continue to mention that they are not planning layoffs and continue to have difficulty hiring. Therefore, I am taking less signal from the recent labor market data until there are clear trends indicating that both spending growth and labor market have materially weakened. You know, that's something I've talked a lot about, because the labor market is not really seeing those signs of weakening. We have a lot of sectors that are struggling to hire people. I know I work blue collar. I run heavy machinery most of the day, and we're always hiring. We can't get enough people, and part of that is just, the youth that they want something a little more cushy. There's also a lot of the fact that you see people going to college when, if you go out and you find a trade, you can make just as much money eventually down the road as if you had gotten a college degree. You do see a lot of people who cite work treatment as a big problem, where it's like, if you're treated like a replaceable employee, you might not want to stay in that job. And a lot of people are okay with taking some time to find a job that better suits them. And if you are able to do that, that really doesn't show that you have a weak job market. It's just something to keep in mind, because as you see a bigger rate cut, you also might see the inflation that they've been trying to battle heat back up, because now you're seeing lower interest rates but higher borrowing, yet not higher spending on anything, because it's not impacting your consumer. It's only affecting the producer side of things, which sometimes that'll flow over to the consumer, but not initially. And that's where they catered to the investor market, where they wanted to see a bigger rate cut. And all that might lead to is having to see another big rate cut to keep up with things, so that you actually might see that flow over to the consumer, or you might see them have to backpedal on that just a little bit. So something to definitely keep in mind. And then I did have another article. Let me get it pulled up real quick. I forgot to save it. I had seen it this morning. There we go. It was from a few hours ago. Let me zoom in so y'all can also read that. Might make that a little bit easier to read. There we go. Bitcoin ETFs removed nearly 5 times daily supply as Ethereum ETFs see strong rebound. Bitcoin exchange traded funds ETF listed in the US are doing their bit to boost supply scarcity in the crypto market. According to the latest data from Farside Investors, Bitcoin exchange traded fund ETFs saw an inflow of 136 million on September 24th. Leading this surge was BlackRock's IBIT ETF, which experienced a significant inflow of 98.9 million, marking its largest inflow since August 26th. This IBIT's total net inflows to over 21 billion, reinforcing its #1 position in the market. Other notable contributors included to Fidelity's FBTC with 16.8 million in net inflows, said Bitwise BITB, which attracted 17.4 million. More significantly, the inflows on September 24th were equivalent to 2,132 Bitcoin, with IBIT accounting for 1,548 Bitcoin per Hey Apollo data. Given that the current daily issuance of Bitcoin is around 450 Bitcoin, these inflows represent nearly 5 times the daily mine supply being removed from the market. Overall, Bitcoin ETF inflows have reached 17.8 billion, underscoring continued investor interest in these investment vehicles. Ethereum recorded 6.25 million in total inflows on September 24th, making it the third largest day for the Ethereum ETF inflows since launch. BlackRock's Ether led the charge with 59.3 million inflow, its largest since August 9th. This rebound came just a day after Ethereum ETFs saw their largest outflows since July, underscoring the volatility inherent in the crypto markets. Despite the intense inflow day, total outflows from the Ether ETFs stand at 624.4 million, reflecting the broader uncertainty investors' faith with Ether compared to Bitcoin. Bitcoin is the flight to trust. There is a bunch of problems, in my view, if you want an Ethereum ETF, where I can't stake it. So why would I buy that when I can just go buy Ethereum and stake it? So just something to keep in mind. At the same time, if I saw staking on the Ethereum ETF, I'd probably get out of it, Ethereum altogether, because staking is what secures the network, and if you have large people working together on that and able to hold a larger market share with larger capital, it kind of weakens the security in my mind. They'd keep gobbling up and gobbling up. That's just my sell-off indicator for Ethereum, though. Let me take a quick look at chat. Good morning, Alexander G. Wick 589. Good morning as well. Let's see. 16 billion going to FTX creditors next week. Yes, I had seen an article about that. I had it pulled up the other week, and we never got to that on the show. So I can definitely hop into that article for tomorrow after I go over the GDP data, because it's definitely interesting to see. It could also be halted by the SEC because they still have some open regulation on all of that, and the repayment schedule is not completely set. So Mark Dutch said, yeah, it looks like we're close to another blow off top and a bigger correction recession later in 2025. Yes, and that's definitely something that could be helped along by a bigger rate cut by the US, especially if they decide that they're going to do another 50-point cut at their next meeting. We're coming into the strongest time of a market year with the holiday season and extra spending, and it might be done just to kind of boost those numbers. We really won't see the full effects of this rate cut, in my opinion, until we get around to next year, where we start seeing, okay, normal spending is happening again. Because I know a lot of people that have already started buying some small gifts and things like that and waiting for the big sales to buy the big gifts. So it's kind of just the start to this holiday season, as you already see Halloween stuff going up in stores. So kind of signals that beginning of increased spending, where the rest of these numbers that we're going to be getting are all holiday numbers and not a good reflection of your average economy and average spending. So let's hop over to the Bitcoin chart. We have kind of been ranging above this 786 for this whole week so far. We've got some bounces up and down and not a whole lot of strength. If you come over to the 4-hour chart, zoom in just a little bit, we do have a bunch of divergences, kind of signaling that we could pull a little farther down. But you do see a lot of big wicks on the bottom side of things. So that's indicating a lot of buying pressure, which in my mind signals that people really are just trying to keep it at this range until they know where the GDP data is setting things. Where if things are really good from this last quarter and you have a 50-point rate cut, it'll kind of signal where things might lie for Q1 of next year, where if things are decently positive and we kind of see things ticking up, we'll see the slowing from the backside of the holiday season, but things can kind of stay at the pace that they were at and hopefully tick back up to the upside. It'll really just depend on this next rate decision, though. Because if they cut the full percentage while they're just trying to boost the economy during a holiday season, then it shows a lot of risk for what we could hit afterwards, where we really overheated things. And that's where inflation can rear its ugly head again. And instead of continuing on a healthy trend downwards, where we forced a lot of other countries to not do rate cuts or rate hikes while our dollar is weakening, then we will see that and feel that as an American citizen on how companies decide that they're going to either hire or fire, or you might see that in weakening labor markets where you can't get your kind of 2% increase on a pay raise because things are heating back up. So just something to keep in mind on that. Just kind of waiting on this data drop for tomorrow, and that will be very early in the morning. So if we do see any heavy moves, it will probably be all posturing for that move. I did look at crude oil because, we are getting that crude oil information later today. We broke to the downside of this wedge that I had seen, or constricting. It was a triangle, not a wedge. That was my bad. But instead of breaking up to the upside of that, which is a 50-50 chance when you see something that's more symmetrical like that, we did break to the downside. We have pulled back up to that support line that was sitting in that bottom side of the $70 range and have bounced off of it. We are sitting above the 382 on the fib. So would be a decent point to find some strength if we're getting positive data on that today and kind of see it tick back up to try to pull back above this trend line. That fib is sitting at 7.45 and could be a spot to find some strength. On the prime oscillator, we did have some bear divs along with an oversold signal and a reversal signal. We are seeing some outflows on that, so just something to watch on the 4-hour. This is the 4-hour chart, so it'd be something to watch on a lower time frame chart as we get that data this morning. You are seeing some indicators on a lower time frame chart like the 15-minute that this 382 could be a nice bouncing point. So your outflows are kind of lightening up, and you did get some oversold signals down here. So could be that 382 is a bounce before we reclaim some strength. Really will depend on that data drop for today, though. Good morning, French Toaster, Buck, and Randy Abite. Oh, are you talking on the articles there, Mark Dutch, when you say, I'm not sure if it's the resolution on my PC, but it's definitely not readable, or are you talking about the charts? Because I can totally zoom in so that things could be a little more readable. I don't know if that's any better. And BOB said, I forget, are FTX customers getting reimbursed in USD from crypto that was already sold or fiat? Normally, in repayments, you see a repayment in cash and not in the actual asset that you lost. So I'd have to dive a little more into that. But normally it's a percentage of whatever holdings you had. So I'll have to dive back into that article. I can zoom in a little bit more and see if that's any better for you. Oh, Randy Abite said, I'm in Tulsa, Oklahoma. Well, that's my old stomping grounds. That's where I was born and raised. So I hope you enjoy it. Just be careful. Don't go over to like 68th and Peoria area. It's not amazing over there. So I don't know if anyone had any assets though. I'm going to hop over to the Dixie. It will kind of show us how people are valuing that dollar for today. As I'm still on that 15-minute chart, we have seen a lot of a few overbought signals with a reversal signal as well. The MACD looks like it's about to cross on the top side of things, so could see a little pullback down. We did have this 99.58 that is sitting below us, which is a very strong bouncing range for the dollar. And with our downtrend on the Dixie, could be a nice bouncing point. So just something to keep in mind, as our GDP data will be coming out tomorrow and will be the real big mover. We've kind of seen a slight tick back up, but you have seen some bad data coming out from other places in the world. So that kind of helps the dollar's strength. You are seeing these moving averages kind of start pointing back up though. So just something to keep in mind, that we might see a bounce down back here at the 100 range. There is a gap here. So could see a little bounce right on the top side of it at 100.35 and keep this area before we see the GDP data. I also was taking a look at gold this morning. We've been in a new range on the gold, making new highs, new all-time highs, with people kind of scared about the economy. You do see a flight to quality when you see uncertainty in the markets. We are sitting right above. It was on the daily. Let me get the daily pulled up. We are sitting right on top of a fair value gap that started over here at 2,500. Let me get it drawn out. Might be a little easier for you to see. That's 2,500. It's a nice point right below the last highs that we made. So if we do see the dollar strengthening, could be a nice little point to pull back to. You are seeing some curvature on your Prime Oscillator Pro, as well as a bit of a slowing down on your MACD. So is just something to keep in mind. Could still see more inflows though, and more movement to the upside before things kind of slow down. This GDP data for tomorrow will be the big signal though, because should I feel secure in things, or should I not feel secure in things? And that's what a lot of people are waiting on. You are seeing this curvature right here that I was talking about, kinda still green now, so could show continued trend to the upside. If you drop it back to the 4-hour though, as with Bitcoin, you are seeing some bearish divergences. We did get the reversal signal and the reversal dot, so this could be the little top before a pullback to the fair value gap I had pointed out, or it could just be a little pullback down to this last little range that we were staying at. This was the 2,600 to the 2,640 range, where there was clearly a lot of buying pressure, as you see the initial wicks here and the selling pressure unable to overtake it. There was a little bit of selling pressure here at that 630 range, so could be a nice point to see a little bounce and continuation, or losing and pulling back to the fair value gap. I was kind of hoping LBC would have been up by now, but hopefully he can slide in here before the end of the show and show you the overview that he had on Bitcoin, because he's had a forecast that has been playing out extremely well, and I kind of wanted to talk to him a little bit about that, because we had a talk yesterday about it after the show, and had some interesting things to say on both sides of it. So I had looked at copper. Copper is usually a nice signal on how the blue collar side of things is doing with home building and things like that. It is used in absolutely everything. We have finally pulled above this 50% line on a fib. It's the $4.42 range. We did see this reversal signal on the Prime Oscillator, as well as the final curvature down to the downside, and kind of stagnant on the inflows. So that $4.42 could be a nice little pullback point, as you see the MACD kind of getting that curvature as well and setting up for a cross. If you pull it up to a daily chart, you can see though that we are still really pointing up on your MACD. We did get that reversal signal, but everything's still green on the inflows. So the pullback would probably not be that extreme. You know, we did have a nice little downtrending resistance. This was pulled from back here and was sitting at the top side of that candle. We did see a little break out of it, but here was the rejection off of it, the rejection off of it here, and we finally flipped to the upside of it with a lot of strength on that. So kind of a nice sign that we smashed through that so heavily, and with home sale data that we will be getting later today, could be a nice little move up for copper and other industrial items. So I just kind of like to use copper as my indicator on that one. We also saw silver, which is used in a lot of electronics manufacturing, kind of make its move up back to the top side of this fib retracement. I had pulled that back here from, let's see, $22.46, and I had pulled it up to silver's $32 high. This is also a precious metal that is sometimes used as a reserve in certain countries, and with it being used more and more in electronics, kind of decreases its supply. You know, a lot of the electronics that it gets used in make it unusable to ever be used again. It is used a lot in one-way missiles and things like that, and a lot in airplane construction, and also in cars. So supply is definitely decreasing on that. We finally broke above this 236. We did see a lot of buying pressure on that, meeting some selling pressure resistance. Kind of consolidated up above it. Only saw this brief little touch here. If I drop it back down to the 4-hour, you are seeing a little bit of curvature though on your MACD, and definitely got that reversal signal on your prime oscillator. So coming back down here to $31.69 would be a nice point to see a little bit of bouncing. On the bottom side of that range was $30.71. So a nice little range to come back down to. You are seeing a lot of red on this prime oscillator with the inflows. So kind of something to keep in mind as the GDP data. I know I keep referring to it a lot, but that is going to be the big market mover. Should I feel secure in buying something that's safe, or should I feel secure in buying something that is a little more risky and will play me out better for the short time? And that's going to be how markets really view that GDP data. So I don't know if anyone had anything. I'm going to ask one more time if you have any assets. I'm probably going to cut the show a little short. This is a lot on the voice, and I really need some water. So I ran out right before the show, and I normally run in the middle of the show when LBC's on to go refill my water. So I'm going to take a look at near, cause I know username gave me some crap the other day in the chats about near and me not looking at it because you know, he says that I hate near, but it was definitely my biggest gaining asset in that little alt rally that we saw last year, and when Bitcoin dominance was kind of ticking down. I talked a lot about this green line here sitting at $3.41. It was below the 382, which has been a point that we have bounced off of a lot. So I was hoping to see these turn into support from back in the past when they were resistance and see them be a bouncing point. We did come all the way down to that, saw a little break down below it, and immediately saw heavy buying pressure down here at the $3 range, which, I definitely put a little purchase on. It was a small DCA. I wasn't sure how much strength we would get, but when we boosted up above that 50% on the fib and pulled back down, I did a little bit more of a bulk buy on near, because kind of showed a lot of strength when you're not really going to get a whole lot better buys unless Bitcoin is coming back really hard and that broadening wedge that it's in. And I haven't been overly convinced with how we didn't really make a top side of that broadening wedge and didn't really hit the bottom support on that broadening wedge this past time, that maybe we might see a little bit of shift to the upside. We are kind of at that point in a cycle where things kind of start making that move back to the upside for Bitcoin. It's been 6 months. If you look at it on top of other halving cycles, this is kind of the time of the cycle where things kind of find their strength. It's not big moves up, but it kind of stops losing those bottom sides. You normally do see that little tick down real quick before a blast off, so might get some lower levels here on near again before we kind of move up with the rest of the market. This 382 is sitting at 394. Would be a nice little bounce point to come back down to. If we lose this range right here at 4.3 to 4.8. So we are seeing heavy curvature on that MACD with a cross on there. It's not fully crossed. They are touching though. So could just be a cross and a cross back to the upside of that, as you kind of still see inflows in the green. The prime oscillator is pointed down though, so kind of heavy red, no indecision signals. With the higher high here and the lower high back here, it's kind of a point for a divergence to create. So something to keep in mind on that one. If I drop it down to a lower time frame, the 15-minute, you are seeing the curvature here and the curvature here. No real reversal signal on that though, so that's why I'm thinking kind of a little bounce for the morning. You did see this 50% line be a point of resistance that never got turned into support. So that $4.88 range would be a nice little pullback point to find strength at. It'll really depend on if Bitcoin can keep its little range going with sideways movements, or if we kind of see a tick down or a tick up on that. Really been a boring week, and there's not a whole lot to really indicate whether we're going to get upward movement or downward movement for Bitcoin. So just a nice little time for alts to gain some strength. It is winding close to 6:20, or yep, 6:20 on my time. So I'm gonna swap over to the solo screen and get into the chat. I see username said BC Port Corp should have been in here. French Toaster Land. Trolling the people like crazy here. You're always trolling the people. Let's see. Keyword username was then you turned to the dark side and started hating it. No. I like near steer still. I've just been waiting for the buy points, you know? When it hit that $7 range and I saw Bitcoin selling off, I kind of sold off everything and put it all in dry powder for my trading account. So the best way to get more dry powder is to trade your way into it sometimes. It's kind of been a little easier now that I can use my tablet at work to trade, so staying a little more active on it. I did see Moho slide in here as well as username. Good morning, good morning. TI Joe as well, and Average Crypto Joe. So good morning, good morning. Let's see. Moho said, good morning. If you have a chance, could you look at Poet on the NASDAQ? My buy is $2.60 and unsure if I should take profit or ride it out. Let me see if I can find that. Let's see. Is it Poet Technologies? Let's see. BOET. There it is. I'm not sure that I'm looking at the right chart, 'cause I'm seeing, oh, it's on percentage. Let's see. There we go. I don't know why it was on percentage. Yes, Poet Technologies. All right. Well, I've got that pulled up. Let me swap back over to my screen. So, you said you got in at 2.6. I'm thinking it was probably this low over here. You are seeing some CME gaps on here, and a nice little reversal signal on your prime oscillator. Overbought signals flashing as well. You are still seeing inflow being kind of green, but you know, that is a nice little 114% move. So to current price, 80% move, which in the stock market is extremely amazing for such a short period of time. I don't really offer financial advice, but I'm not sure how much. I'm not sure kind of what this company does, so I'm not sure how to gauge how well the market might value it. If you kind of pull these highs from over here, you can see a point that might be a good bouncing point for a pullback to. But it really just depends on how much faith that you have in this company. If you're more of a hodl guy, hodl your way through, because over the long term, you kind of see that the trend is up and right on a good asset. If I pull this up to the weekly though, let's see. You are kind of seeing a giant consolidation pattern. Uh, Not really making higher highs and higher lows. You are kind of seeing this 84 cents range be its point of strength. So if it does pull back and fall below this, it would be a nice point to come back down to. You are seeing the uptrend on this though. So let's pull that support. You know, here's several bounces on that. So really, this one's really just going to depend on how well you have faith in your asset. I can't really say either way. It's in an uptrend though. So, you know, if you feel this is a good time to take profit and maybe see if you can buy in at a bounce on the support line, might be a nice thing to do. So play that how you would like. Just my little 2 cents on it. Oh, let me hop over to the right screen. It is 6:24. I don't know if you could hear it in my voice, but I definitely need some water. So I'm going to cut the show short by 5 minutes so I can go get some water. Thank you for everyone that showed up today. I did see a few more people sliding in. It is that time of morning where I gotta get ready for work though. So thank you to everyone. Brutal, Florence, and oh, that was it. That slid in for the morning. But thank you for showing up. If you haven't already liked and subscribed, go ahead and hit that like and subscribe button. Make sure to tune in to Piper later today with the morning market open report. That'll be Piper and OC Guy. This night we will have the crypto nightcap show with Tradefly and FD White. So make sure to tune in at 8:30 p.m. for that crypto nightcap show. You get a lot of alpha here on this channel. So if you could show a little support and hit the like and subscribe and maybe give us a share if we're worth the share, it would be greatly appreciated. Check out the links in the description as well and join the Piper Academy Discord as well. There's a lot of stuff going on there. We are in the process of adding a little bit more as well. So we're always trying to provide some value. Everyone, trade safe today. Keep in mind that GDP data is going to be the heavy mover for the markets today. So people will be prepping for that. Other than that, everyone wake up because today's going to be a good day.